at the real picture. Aditya Narain joins us now here of research with Edelweiss Securities. Aditya, fantastic to have you back. Thank you for joining us.
Thanks for having me over. Sorry?
Is it looking good for corporate banks, or this is looking good because of base? After one quarter, we'll realize that the hole only has got deeper.
No, I think there are two ways of looking at it. One is in terms of the current asset quality cycle, right? And I think this is reflective of the fact that you've reached the bottom or are reaching the bottom, and that incremental stresses have actually already been captured or they're diminished. So I think in that sense, this is very illustrative of what is, of the numbers are illustrative of what's happened. I think the second part is, when are these guys going to be ready to go and put out money? When will they have the risk appetite to go and lend? I think that is really the second phase and the next phase that you effectively need to look at. And that, I think the jury is still going to be out, because most of these people have had a really rough ride over the last couple of years, and risk appetite often comes back a little slowly. So I think that is going to be the challenge, rather than these numbers suddenly deteriorating in any material manner in the next quarter going on.
Do you think that they would manage to get that gumption? Because, you know, some on the street believe that it may not be PSBs because they're going to tighten their purse strings further. That share could actually be taken away by NBFCs.
No, that's absolutely my point, that it's one thing saying that the asset cycle is ending, right? There is a story there. You've seen some response in terms of stocks. You'll see more of it. The second bit is, do they have the appetite to actually go out and lend? And where do they lend? They'll obviously have some appetite, but if it's going to be completely at the top end where there is no margin, it's not going to have the same impact in terms of stocks. And I think that is what you have to think about, and think about how you're going to play, rather than necessarily the asset quality cycle. I think that is a done bit.
And a large part of that will depend on corporates wanting to borrow, right? Which has not come through.
Yeah, well, in any case, I think you're right, but I think that is something where the change in risk appetite has been more gradual. The risk appetite has tended to build up a little bit. There is a little bit more appetite there. But the reality is, has to be matched from a supplier side also. If they're going to stay out, then it's the private banks who have the appetite who are actually going to get a disproportionate share.
You know, we spend a disproportionate amount of time to understand banks. But let's talk about a sector which has been a performing sector, but is getting hit because of competition and because of disruption. Autos.
Right.
Two-wheelers, we know that the cycle may be great, but there is an absolute market fight share.
Right.
Within the four-wheeler space also, there's entire talk of electric vehicles and what disruption it could have.
Right.
For the CV or for the commercial vehicles, there are new axle loading norms which in the short term will ensure the demand will remain subdued.
Yeah.
So is the near-term outlook, medium-term outlook looking slightly shaky for autos across the board?
I think if you were to look at an extended cycle, no. Because I'll tell you where you need to be really watchful about competition is when you have new entrants or people who are wanting to change their positioning entirely, right? That is not the case as far as the two-wheelers is concerned. It's basically a fairly consolidated market. You had this problem 3-4 years ago when Honda was coming in, right? As far as the four-wheelers is concerned, I think Maruti continues to be very dominant. There is simply not enough disruption going on in that space. As far as the CV space is concerned, you could see a little bit of it again, but it's basically a two-player or a three-player market. So while you can have a quarter or two in terms of disruptive pricing or disruptive strategies, these disruptions don't sustain for too long in an oligopolistic kind of structure. They happen when the market is tending to widen. If you say in the NBFC space, could you have a lot of distortion? In the housing finance space, could you have a lot of these things? There is a possibility, because you have new players who are going from 0 to wanting to get to 2 or 4, and they can try and sustain it a lot. In segments where you have a fairly well-entrenched competitive landscape, disruptive pricing seldom goes on for an extended period of time.
So what about four-wheelers? The reason why I'm asking you a specific question of four-wheeler is because Bajaj Auto historically has been a profit and a margin conscious company.
Yeah.
They've said, we are not there for market share.
Yeah.
We want to be India's most profitable two-wheeler company, and he would beat his chest and thumb the table when Rajiv Bajaj in the past said that my margins are at 21%. Dekho, kitna acha margin.
Right.
The same guy comes out and says, sorry, I would do whatever it do to regain market share.
Yeah.
iShare has been the darling of everyone, and now Ari says that I'm going to come and hit you in the same turf. BMW, Harley, even BMW.
Yeah.
So I'm just getting a feeler that within the two-wheeler space, there is competition, there is war, and there are new entrants.
Yeah, but as I said, I think when you have relatively limited players, it is unlikely that two players are going to drag themselves completely down into the ditch.
You will be a buyer in autos.
Sorry?
You will be a buyer in autos.
Yes, I mean in the two-wheeler space we are more neutral. We want the dust to settle down. But if you ask me whether it's going to be as competitive 4 to 8 quarters down the line as it's expected to be upfront, I think no, firstly. Secondly, I think in these spaces, because brands and products are typically more entrenched, the impact of that can actually also be somewhat limited. And that's going to be a test of the brand and the product out there. So I would say, I think obviously the next couple of quarters is going to be a little tense and people are going to watch very carefully. But I'd be surprised if this extends an extended period of time. You'll have a 2-4 quarter period when they try it. If it works, then you'll have some kind of a base reset. If it doesn't, then they revert to normal.
You know, since we're talking about pricing, it gets me to one of the darlings of the market, the hottest sector till about 6 months back, and that's been aviation. And we always talk about the fact that irrespective of what crude is doing, some of these aviation companies haven't been able to adjust pricing according to the spike up in crude. What happens to aviation now, which was erstwhile being looked at as a quasi-consumption play? Do you only buy aviation when crude prices are low, sell it at the top, or do you think there is more to the story than that? Ride the wave, sit through this volatility in crude, and you would make money.
See, I think aviation is something that is very influenced by the external environment, right? So I think it's a volatile consumption play rather than a pure consumption play as seen in the Indian context. And I think to that extent, you have to be watchful of what the external developments are. I think you get that growth, but your ability to pass on stuff in a competitive landscape. See, if you compare the competitive landscape in aviation vis-a-vis two-wheelers, it's very different, right? And I think that's the difference that I'm effectively talking about. Here, the competitive landscape is such that it will cap how much you can charge, right? And it limits how much, it allows you to go down a lot, but caps how much you can effectively charge. So I think this is more a volatile kind of consumption play, and you have to be cognizant of the external environment.
So avoidable right now?
Well, at this point in time, I think those prices have effectively taken a beating, but unless you have a greater sense of where crude is going, it does become a little bit of a challenge. If this was a two-player market, it would be a different story. I think the demand has actually been very resilient, even as prices have gone up a little bit. Demand has, the traffic numbers have actually continued to be good,
strong,
but people are taking it on the jaw when it comes to the profitability that is there. So I think this is something that is a little bit more cyclical. Consumption is the demand side, profitability is the external side for this one.
All right. What about IT and pharma? Are those the definitive alpha opportunities right now in the market? Because IT, we've seen 2 quarters of good earnings. Pharma, things are looking up, at least in terms of the sound bites that we're gathering. I see Dr. Reddy's and Infosys as part of your large cap bets. What's the thought process?
Yeah, so I think we've been very bullish on the IT space for the last 2 quarters or so from early this year. And we think this is really a 3-4 year trend. So I think this is something that's effectively going to sustain. We're very clear that I think what will happen within the sector is that business will tend to shift to the larger businesses and the larger caps than the smaller ones. So we have a distinct preference for the larger ones like Infosys over the mid cap, where we actually believe there's a certain amount of overvaluation.
You prefer Infosys to TCS as well?
Yes. Right. Well, it's in terms of there is a valuation gap, there is a catch-up game. That
purely on valuation parameters.
Valuation and a certain amount of catch-up in terms of business momentum, right? So I think to some extent, IT is a little bit more of beta simply because the whole sector has got a huge amount of tailwind, and there we prefer the larger caps to the mid caps. As far as pharma is concerned, it's a little bit more alpha there, right? I don't think it's necessarily a sectoral tailwind. I think there still remain fundamental challenges as far as the US market is concerned. But there are specific stock opportunities, like you mentioned, Dr. Reddy's, where we think they are in particular very well lined up in terms of their product profile.
Reliance is up more than 10% after the AGM. And now everyone is saying that are they trying to achieve what Tencent has achieved globally by becoming an AI company, by moving into big data? The old economy business is okay, but the old economy business is now getting rusty. Are markets right in giving that extra P multiple or the perception benefit for Reliance after the AGM? Because 90% of the AGM this time was centered around the new businesses. There was very little mention of the old businesses.
See, I think in many senses, Reliance is falling in a very sweet spot, and we've been pretty bullish on this stock for the last year and a half, and I think that has played through, right? But I think the interesting thing in this is you said the old business is getting rusty. It's not getting rusty. The cash is all coming and at an incremental pace from actually the older businesses that are continuing to expand on new platforms. So I think the sweet spot is that the cash is coming from some of the older businesses, the real cash. In between the cash that had been invested in telecom is now actually looking after itself fairly well and getting onto that, data is the new oil kind of economy. And the AI is the option on it, because if you've got that backbone going, which is now looking after itself and doing everything that they effectively promised. So I think that's where it's all coming through. It's a sweet spot. If we were to say that the move is on the back of all the AI talk, I'd say it's run ahead of itself. But if you were to actually combine the fact that the old business, even though a lot of it is new, is generating a huge amount of cash through now, and more will come through. If you look at the invested business, which is telecom, which is actually getting the share and getting decent revenue numbers and traction. And the AI is then more the option value that they're seeking to create, having created the platform as far as the data economy is concerned.
I'll blend my next question into two. First, let's talk about the style of the market. That is important for us to identify, because markets, they follow a pattern, they follow a style. Right now, there is disproportionate amount of premium which some of the consumer names and some of the private banks are enjoying. That's the style. And second is a mega trend. And when I say mega trend, I'm talking about 15 years ago, if you bought into private bank, you've hit a home run. 10 years ago, if you've bought into an NBFC, retail manager NBFC, you've hit a home run. So what style do you think will work for next 3 years? And what is the mega trend in making for next 5 years?
I think in many senses, I would actually boil it down to a simple thing. I think market leadership is really going to be the defining feature of businesses that do better and generate higher profitability, rather than the debate on large caps versus mid caps. I think wherever you have market leadership, you're going to get disproportionate growth and you're going to get disproportionate profitability. And I think that is really the mega trend that you've effectively got to look at, and that's how you look at the style also.
Give me an example.
If you look at any of the sectors that are actually reporting, you see all the market leaders, they're the ones who are tending to get, whether it's consumer, whether it is banks, whether it is automobiles. It is the market leader which is actually tending to grow faster and is being able to do so on its own profitability. You attribute that to scale, you attribute that to brand, you attribute that to efficiency, but effectively a lot of that is effectively coming through. And I think that is the key that you really need to look at over the next couple of years.
But you yourself are betting on Infi, not TCS.
Well, there's always between large businesses, there'll always be that trade. How do you balance it between valuation and between number? So yes, by market leadership, I don't mean number one. I mean the top 3 or 4 in every sector are what are really, really going to count. And it's not whether it's a large cap or it's a small cap. You can have a lot of small caps that look very attractive but are number 15th in their sectors. I'd be a little bit more watchful about the valuation framework they can live with, even if they can get a lot of growth, rather than a number 2 who's still actually a very small player, but the fact is he is meaningful in that market.
Is L&T another example of that? L&T
Absolutely.
and ACC?
Absolutely.
Would that, I mean, so
L&T is a classic case that business will move towards them.
Why isn't the market giving them the value then?
I think it is giving them a fair amount of value relative to a lot of the others. It's question of, has the stock moved enough or not? Has it been valued up for a while for some of that? I think that is more the issue. But are they getting a disproportionate share of business? Are they getting a disproportionate share of every business that they're entering? I think they are.
I'm glad you're talking about market leadership, because the word which we commonly use is not market leadership. Yeah. We are using the word disruption, which is challenging the market leaders.
Yeah.
So whether it is the consumer space because of Patanjali, whether it is, a Netflix and Balaji, what they would do to the way entertainment is going to move. So a lot of market leadership patterns which are intact and where we thought they have moat around them and nothing's going to change them, they're getting disrupted. They're getting disrupted by a range of products, range of services, and range of technology offerings.
I think that is very valid, but I think it's actually peaking off. That disruption by a new player entirely is peaking off. If you see, whether you talk of entertainment, whether you talk of consumer distribution, whether you talk of Patanjali, most of the market leaders or the ones who are agile have actually come in and gone into these spaces themselves, right? Because they have the basic flow, they have the cash invariably, and it's not very, very hard to get into disruptive businesses when you can hire people and technologies off the floor. So each of these examples you've really taken, whether you take, the reality is whether it is the Tesla-like kind of stuff. You know, all the auto manufacturers are also getting into the same thing. So you might have a Tesla who's changed the way the world looks at things. You might have some of these disruptors who have come in. But other than a few global guys, for the rest, it's the incumbent who's been slightly alive to the risk and the opportunity who's actually grabbed it. You look at all the VT, all in the media space, anything that's you know, net-based or YouTube-based, it's all the existing guys who've actually become very, very strong there or have entered very aggressively. Patanjali was big, but you know, the Ayushas of the world are all coming back very, very aggressively.
Volume growth is back for levers in Britannia. I mean, that is true.
Yeah.
You think Airtel has done that in the telecoms? They've been able to go up their zone?
Effectively, they've also come back very strongly in that space. So there isn't a standalone differentiator who is being able to disrupt this whole business in a meaningful manner. Because remember, disruptors end up being monoline, and invariably they're back to some extent with cash, but not by the same amount of cash. And to some extent, they invariably lack the experience in that space. So I think that peak of disruption by a new player, I think that is more or less happened. I think you're getting plenty of existing guys who don't want to necessarily disrupt their own business completely, kill their own business at the possibility of a new business. But all of them are there in that new business space. And I think that's why you're tending to see that the big boys are continuing to get, you know, a little bigger, and market shares have not changed in a lot of these spaces, nor have opportunities gone up. You have a Paytm who's come up in a particular manner, but again, those are, you can take a 3-4 names. In most of the other spaces, the incumbent, the alive incumbent, right, who's been ready to change, I think he has managed to make actually, you know, a reasonable foray into these areas. I also think a lot of businesses are thinking like this now. You know, when you talk about Reliance's AGM being about AI, it gives you a sense of the fact that, come on, this is, you know, a refining company which is talking AI, because, you know, that's where they see the disruption. They see that they made the investments, and they should be leading it, or at least being part of it in a meaningful manner.
What about the overall market construct, though? Are things looking conducive? Because while the micros definitely are improving, aside of earnings, there's been a recent bout of correction as well that we've seen play out since February. But the macros continue to be challenging, be it currency, be it crude. For all you know, tomorrow's policy, we may have an interest rate hike as well.
See, I'll tell you, the way we see the market, we actually see it in a range of about 10,500 to 11,500 on the Nifty. And so now a little on the higher end of it. And the way we have visualized it, we really called it a kind of a half circle, because the micro has come half circle from being bad to beginning to look good, and the macro has been from being the right end has actually tended to reverse, and you're somewhere in the middle, right? At some level, I think it's very well balanced, and I think this can kind of explain why the markets had been weak a month ago, because the macro was looking like it was going to go full circle, right? And it's actually arrested itself, and it's hanging around somewhere there. Whereas the micro actually is getting more convincing that, okay, this has turned and this is going to be a sustainable space. So I think in many senses, with the backdrop of the elections also there, I'd say this is a fair range where the market will be. For the range to change, the macro has to fall back quite a bit for it to start heading much lower. For it to hit much higher, you've got to have the macro suddenly saying, okay, this is it, the currency pressure is over, the interest rate pressure is over, and you know, a year and a half down the line, you're going to be where you were 6 months down the line. But otherwise, I think you're somewhere in the middle. It's reasonably well balanced. But I think, I'd say in the last couple of weeks, you've got a little bit of tailwind from the micro. And I'd say from, again, a couple of weeks back, you've got a little bit of tailwind, or at least the easing of headwind on the macro.
All right.
Appreciate your time. Always
great.
Always lovely to interact with you.